Welcome back, guys. Johnny here, and in today's video I'm going to give you an update on VYNE Therapeutics, or ticker symbol VYNE. Now, a lot of people have been requesting for me to do an update on this, and it's going to happen today. Now, we're going to go over some of the analytics, and then I'm going to go over 3 of the news articles I found that are the most current, so that way I can give you the most recent news. Now, right off the bat, I have seen an article talking about an options call back in July for $2.50 for VYNE Therapeutics. Now, as you can see, I have a price alert for the $2.50, and as you can see too, I have my own position of 228 shares at $3.79. I have been slowly averaging it down over the course of some time, but not as much as I would like, due to just waiting for it to have signs of good news. Now, as you can see, we have had some highs and lows, but if we really dig into it a little bit more, you can see that we have created some highs up here and some lows, some higher lows and some higher highs in recent news, but overall it is still quite volatile, getting down as low as 90 cents and as high as $1.75, which is amazing. So let's go over the Zacks.com. They had an article come out December 13th, and it states that need to pay close attention to this because July 15th, 2021, there was a $2.50 call, which had some of the highest implied volatility of all equity options that day. So what is implied volatility? Well, implied volatility shows how much movement the market is expected in the future. Option with high levels of implied volatility suggests that the investors in the underlying stock are expecting a big move in one direction or the other. It could also mean there is an event coming up soon that may cause a big rally or huge sell-off. Now, clearly, option traders are pricing in a big move for VYNE Therapeutics shares, but what is fundamentally picture for the company currently is that Zacks saying that it's a hold in the medical drug industry that ranks the bottom of 39%, but I have some other articles here that state that it is actually a buy. So why VYNE Therapeutics stock might make sense if you bought it today. Now, this was December 22nd, so it's fairly newer than the article we just read, but basically states that VYNE Therapeutics traded at $1.15 at close on Tuesday, the 21st, made an upward move of 3.6% on its previous day. Looking at the stock, they see that their range was between 110 and 123, but in terms of its 52-week high of $13.20 and a low of 90 cents, the company has gained about 7.5% over the past 30 days. Now, what does this mean? Well, VYNE Therapeutics has a market cap of $65 million and is expected to release its quarterly earnings report on August 4th. Estimates by analysts give the company an earnings per share of negative 32 cents, with an EPS growth for the year raised at negative $1.33 from the previous year. Now, they're saying it's going to get slightly worse for the next year, but they have strong growth in the EPS for 2 years coming. Now, the last article states that this was December 16th, so just a day or two before the last article, is that they're actually down 1,057% from the peak or 52-week high, but they still have been able to come back 21% gain from a low of 90 cents. So there is still a lot of volatility. There still is a lot of market capitalization at 56 million, and it's got an average trade volume of 2.3 million shares over the past 3 months. So there is definitely people holding the bag on this company, right? Now, the consensus recommended of a buy from analyst, meaning a rating of 2.20, and expected earnings is negative 32 cents. Now, doesn't really say much, does it? It doesn't. But let me go over some of the analytics that I'm doing here on this chart. So as you can see, we had a low of 90 cents and it actually shot up, and we'll show you here, from the 90-cent mark all the way to the $1.75 mark, actually up here. There was a 92% gain in this company in a course of 6 days. Now, that is amazing if you weren't holding the bag up so high like I was, but then look at the significant drop. Then it dropped all the way down 40%, right? And it's been kind of steadily going up and down from there. Excuse me. And I have some new charts. Whoops. What am I doing? As you can see, right here, we had a couple points where we went up and we hit back on this bottom, and then we went all the way up and we created a new high, and then it went all the way back down and broke through our bottom line here and blew through to a new low. So the new low is 90 cents. Then it blew through the lowest low and then the lowest high, creating a new high, and then creating an even higher high. So geez. With that said, it shot back down, but it stayed where our support level is, right? Our support level was here previously in October 20th, broke through, went up, and then it supported right back around December. Now it looks like it's supported in December as well, and then broke to a new low. So you could put the new low here, okay, which actually corresponds with the lows we had in November. Now, if this continues on the right track, this will actually bounce tomorrow on Monday, and it may go up to a previous high, which isn't going to be very much, because as you can see, I didn't draw that in yet. But we had a high right around here, right? And then we had a high right around here, okay? Then it also had a peak. So with that peak set right here, because it's going off of this right here. So it's a high from your resistance levels down to your support levels. So it's just breaking. So now we can assume that it may go and it might steady line, but if it goes down slightly to 98 cents, then why not buy to go up to $1.09, $1.10. That'll be a 12-cent gain in a matter of just a day or two. But what we really want to do is try to accumulate as many shares of this company on the lows, as many low days as we can, so when it does shoot back up to that 175, then you could actually average down these positions. Now, if I had another 200 shares at $1, I mean, it would definitely bring it down to probably this little 250 range. And the more and more you go down and average down, the higher success. Now, I wouldn't necessarily recommend this for anybody because I only recommend you averaging down on companies that are steadily going up, not companies that are steadily going down. But this company still has some good news stating that it's 100% buy rating from 6 analysts. And because we're so low on our average price target, our lowest price target would be $3. So you could double your money, but triple your money potentially if you bought it now. Average of $5, you'd either break even or make a little more money because my average is $3.78. Or if you bought now, you'd make 5 times your money with a high of $10. Now, I've also had some people some subscribers comments saying that they could see this getting up to $20 in 2025. Now, yes, that's a long time away, and no, this is not any way to get rich quick. This is a company that is slowly getting its baseline, and slowly going up. This is a company that deals with skincare products, and they are a company worth looking into. So if you liked this video, subscribe to my channel, and actually make sure you smash the like button so other people can find this video too. Alright guys, have a great day, and don't forget to leave me a comment.